everyone, I am Gloria Sembiring from Accounting Public Finance 6B. I want to present you material about auditing and public accounting profession. First of all, I want to say thank you for our lecturer, Mr. Rizky Syaputra, who has provided this material for presentation. I hope you can enjoy watching this video, guys. Okay, now we will learn about audit and the public accounting profession. But before it, we must know about definition of auditing. So, auditing is a process of collecting and examining evidence regarding information in order to determine and create a report regarding the level of conformity between the information and the specific criteria. Auditing is collecting data, evaluating company evidence regarding an economic entity to determine and report information using predetermined criteria and checked by someone who competent and independent about it. So, who are the people can audit and have competence about it? Yes, we call it an auditor. An auditor is a person with a financial profession who carry out audits. The audit refers to here focus on reports about the finance of a government, institution, or a company. The next topic is, maybe you think like, why did auditing important to do? Okay, auditing important to do because there are two possible end deviations. The first, unintentional or error. The second is intentional, like cheating or fraud. The audit process is the best way to ensure the fairness and correctness of a company's financial report. Auditing is not just about looking for error or fraud. However, audits to ensure and conformity of financial report with applicable accounting standard and provide an objective view regarding the company's current condition. This topic is benefit of financial audit for companies. The first is maintaining compliance, more accurate report, accuracy in profit determination, simply the loan process. We also listen about accounting and auditing. But what is the difference of accounting and auditing? Accounting is a process that begins with a recording, grouping, processing, presenting, and recording transactions related to finance, so that the information can used by someone who is expert in the field and become material for making decisions. Meanwhile, the definition of auditing is a systematic process for objectively obtaining and evaluating evidence regarding statements about economic activities and events with the degree of conformity between their statements and stabilizes criteria and conveying the result to interest user. So the difference of accounting and auditing is accounting is more focused of processing about financial record as material for preparing income statement. Meanwhile, auditing is more about evaluating the financial record or financial statement that have been made. Financial accounting practice reference its financial accounting standard, or Indonesian called SAK, and published by the Indonesian Accountant Association or IAI. Meanwhile, auditing practice reference is Accountant Professional Standard, or in Indonesian said SPAP and published by Indonesian Public Accountant Association or IAP. Okay, the next is accounting process. Accounting process is start from record or write transaction into transaction receipts, then classify transaction in a journal, and then group transaction into subsidiary book and general ledger, and the last one is report transactions in the form of managerial report and financial report. Auditing process is start from a safe audit with assignments, and then making plan the audit, and then collect audit evidence, then carry out audit testing, and the last one is making report audit test result. In the process of accounting and auditing, there are two methods. The first is stretching method, and the second is fetching method. The accounting process is start from the proof of transaction to journal, and then general ledger, and finally income statement. In this point, mean accounting using stretching method. Meanwhile, auditing process can use all the methods, can use stretching method, can use fetching method. If start from financial report to prove transaction is called fetching, but if the start from the proof of transaction to financial report is called stretching. Okay, for the next topic is types of audit. Audit only can carry out if there are criteria or standard reference, example like financial accounting standard or SAK, policies and procedure, and the last is public accountant professional standard or PSAP. The next is the types of audit by characteristic and objectiveness of the audit. For the first is operational audit, and then compliance audit, financial report audit, and the last is internal control system audit. The next is independent of auditor. Auditors are required to increase their introspective and not be easily influenced by existing interventions. Auditors also follow the rules that apply in the audit profession. Auditor must independent in faith and in public. Auditor can't effect from the internal side or external side. Auditor must have in the middle and professional to doing the audit process. So auditors have some types of auditors, like independent auditors, internal auditors, government auditors, and thus is the type of auditor is determined by auditor's work, position, and object being audited. Okay, first is independent auditor. Independent auditor is auditor who are certified public accountant or CPA who carry out professional practice independently and truly by CAP or Indonesian State Kantor Akuntan Publik. And the internal auditor is auditor in an entity who carry out professional for the benefit of management or commissioners. The third is government auditors. Government auditors is auditor formed by government to carry out professional audit practice within government institution, for example in Indonesia like BPK or BPKP. And the last is the type of auditor is determined by auditor's work, position, and object being audited. The example is technology auditor could also be added as a fraction of an internal auditor. After auditor check the income statement from that company, auditor must giving opinion. The opinion of auditors like unqualified opinion, qualified opinion, adverse opinion, and the last is disclaimer of opinion. Okay, the first is unqualified opinion. Unqualified opinion is given that the financial report as a whole is free from the material misstatement or present in accordance with the financial reporting framework. The second is a qualified opinion. A qualified opinion is given when the financial statement as a whole are present fairly, but in certain part of the financial statement there is a material misstatement or there is a scope limitation. Third is an adverse opinion. An adverse opinion is given when the audit financial statement contain extreme material misstatement due to deviation from SAK or IFRS. Last is a disclaimer of opinion. A disclaimer of opinion is it the most bad opinion from the audit is given there are extreme limitations on the scope of the examination. So the opinion that is really desired from the company is an unqualified opinion because it means that the presentation of financial statement prepared is in accordance with standard. This will of course affect to the company's performance and can attract the attention of stakeholders or investors to invest in the company. Auditor opinion is depend from the financial statement. If auditor found something wrong in the financial statement, and then the management can prove and can give the evidence to prove if the value of the number, the materials is right, so auditor can give unqualified opinion. But if the management can't give the proof or can give evidence to auditor about the materials, so auditor can give qualified opinion. The next is organization of accounting profession. There is two. The first is Indonesian Accountant Association, and the second is Indonesian Association of Public Accountants. Indonesian Accountant Association have responsibility about financial accounting standard. Meanwhile, the Association of Public Accountants have responsibility to improving auditing standard to professional standard for public accountants. Structure in public accounting firm or CAP is partner, manager, senior auditor, and junior auditor. Partner is responsibility for relationship with client. Manager responsibility for management of audit implementation, and senior auditor carrying out audit, managing audit costs, and directing and review the work of the junior auditing. Meanwhile, junior auditing carry out inspection procedure and create audit working papers. Regional service in public accounting firm There is two parts. The first is insurance and the second is non-insurance. Example of insurance is audit financial report, internal control system audit, information technology audit, operational audit. But if non-insurance, example is financial report preparing service, tax service, management consulting service, and accounting information system preparing service. So that's all of our material about auditing and public accounting profession. I'm really sorry about all my mistake in this video. Thank you for watching, guys. Bye bye.